the index funds of the S&P is like 75% of the market. Is there a point where index funds theoretically can't work a course? If everybody bought nothing but index funds, the whole world wouldn't work as people expect. There's also the problem, one of the reasons you buy a big index, like the S&P, is because if you buy a small index and it gets popular, it's a self-defeating situation. When the Nifty 50 were the rage, JP Morgan talked everybody into buying just 50 stocks. And they didn't care what the price was, they just bought those 50 stocks. And of course, in due time, their own buying forced those 50 stocks up to 60 times earnings, whereupon it broke and everything went down by about 2/3 quite fast. In other words, if you get too much faddishness in one sector or in one narrow index, of course you can get catastrophic changes like they had with the Nifty 50 in that former era. I don't see that happening when the index is 3/4 of the whole market. The problem is the whole thing can't work perfectly forever, but it'll work for a long time. The indexes have caused just absolute agony among intelligent investment professionals because basically 95% of the people have almost no chance of beating it over time, and yet a lot of the people expect if they have some money, they can hire somebody who will let them beat the indexes. And of course, the honest, sensible people know they're selling something they can't quite deliver, and that has to be agony. Most people handle that with denial. They think it'll be better next year, or they just don't want to think about it. And I understand that. I don't think about my own death either. But it's a terrible problem, beating those indexes. And it's a problem that investment professionals didn't happen in the past. And what's happening, of course, is that the prices for managing really big sums of money are going down, 20 basis points and so on. The people who rose in investment management didn't do it by getting paid 20 basis points. But that's where we're going, I think, in terms of people who manage big portfolios of say, American equities and the equivalent of the S&P. So it's a huge, huge problem. And it makes your generation of money managers have way more difficulties than people, and it causes a lot of worry and fretfulness. And I think the people who are worried and fretful are absolutely right. I would hate to manage $1 trillion in the big stocks and try and beat the indexes. I don't think I could do it. In fact, if you look at Berkshire, take out 100 decisions, which is like 2 a year. The success of Berkshire came from 2 decisions a year over 50 years. We're hardly great. We may have beaten the indexes, but we didn't do it by having big portfolios of securities and having subdivisions managing the drugs and subdivisions. And so, no, the indexes are a hell of a problem for you people. But, why shouldn't life be hard? It's what had to happen, what's happened now. If you take these people doing some of those early trading by computer algorithms that worked, then somebody else would come into the same thing with the same algorithm and play the same game, and of course the returns went down. Well, that's what's happening in the whole field. Is the returns you're really going to get are being pushed down by the progress of the suns.
If we just own stocks and we own the S&P, our performance would be significantly worse than the S&P because we would be incurring a corporate tax, which would now be 21% on capital gains plus possibly some state income taxes. And effectively, our tax rate on dividends depends where they're held, but somewhere between 10.5% or 11 and 13%. So Berkshire is a mistake, or it's at a corporate disadvantage simply by the way the tax law runs compared to owning an index fund, which has no tax at the corporate level, but just passes through to shareholders. So I don't know whether we'll outperform the S&P 500 or not. I know that we'll behave with our shareholders' money exactly as we would behave with our own money, and we'll basically tie our fortunes in life to this business, and we will be very cognizant of doing anything that can destroy value in any significant way. But we will probably, if there were to be a very strong bull market from this point forward, we would probably underperform during that period. If the market 5 years from now or 10 years from now is at this level or below, we will probably overperform. But I don't think that I don't quite understand the question in terms of when it says the total return of the S&P over a 10-year period and Berkshire's growth in intrinsic value would outperform. I don't know whether that will happen or not. Charlie?
Well, there'd be one big advantage for the shareholders that pay taxes, and that is that the Berkshire shareholders, even if we just match the S&P, we'd be way ahead after taxes. We all have a pretty decent role in life and a pretty good position. We shouldn't be too disappointed.
No.
After a 15-year period of market underperformance, you're cautious about predicting Berkshire being able to outperform the market in the future. Given this, what do you see as the arguments for longtime shareholders to continue holding their stock versus diversifying their risk across an index?
I personally prefer holding Berkshire to holding the market. I'm quite comfortable holding Berkshire. I think our businesses are better than the average in the market.
Is it because you don't think the market values it fairly?
Well, these are just accidents of history, and things are fluctuating at all times. But on a composite basis, I'd bet on Berkshire over the market. That's assuming we're all dead.
I recommend the S&P 500 index fund, and have for a long time to people. And I've never recommended Berkshire to anybody because I don't want people to buy it because they think I'm tipping them into some side. Never. I mean, no matter what it was selling for. And you know, I've made it public. On my death, there's a fund for my then widow, and 90% will go into an S&P 500 index fund and 10% of Treasury bills. On the other hand, I'm very happy having my future contributions to a group of charities that will be spread over 12 years or so after my death to stay in Berkshire. I think the odds are Berkshire is I like it, but I'm not. I do not think the average person can pick stocks. We happen to have a large group of people that didn't pick stocks, but they picked Charlie and me to manage money for them 50 or 60 years ago. And so we have a very unusual group of shareholders, I think, who look at Berkshire as a lifetime savings vehicle, and one they don't have to think about, and one that they'll look, if they don't look at it again for 10 or 20 years, that will have taken care of the money reasonably well. But that I wouldn't argue that the S&P 500 over time. I like Berkshire, but I think that a person who doesn't know anything about stocks at all and doesn't have any special feelings about Berkshire, I think they ought to buy the S&P 500 index.
As a follow-up to that, I believe you've directed the trustees of your estate to invest substantial assets into the index fund. Isn't that a vote of no confidence to your managers?
Well, No, because we're talking about way less than 1% of my estate. And one thing I'm going to do, incidentally, I mean, all rich people get advised by their lawyers, set up trusts so that nobody can see your will and all that sort of thing. My will is going to be public record, and you'll be able to check at some point what I'm telling you the truth about what is going to get done. But 99.7% roughly of my estate will either go to philanthropies or to the federal government, and before it does it, I think Berkshire is a very good thing to hold. But for a given individual, particularly my wife, I just think that having a tiny fraction, which is all it takes for her to do very well for the rest of her life, I think that the best thing to do is buy 90% in an S&P 500 index fund. Now, the index fund people naturally have started over the time. They market more and more products that go to other indices and everything. So they're really starting to say to the American public, they're saying, well, you can pick what continent to invest in, or you can pick what industry, and we'll sell you something for that. And when they just have gotten through telling them, you really don't know anything about stocks, you just buy the whole index. So, so I named the 500 index as one, but it's a tiny portion, but it'll be her livelihood, and she'll have all the money she needs and way beyond it, and that's that.